Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello and welcome to today's podcast. Thank you very much for tuning in. Thank you for coming back. Either way, I appreciate it. Today, I want to talk to you about who's using this and why we maybe haven't heard of whole life insurance, but also probably the biggest user are the banks. So we're going to talk a little bit about that today. And, so many people will say, well, how come I haven't heard about it? And, I talk about it all the time. I don't know why we haven't heard about it, but it's really interesting to me when a bank will come up, they won't ever come up to me, but they might throw a little bit of a fit. And they'll say, well, why are you putting so much money into life insurance? And that's what they'll ask my clients. And yet, the people working at the bank don't even know that most banks have life insurance. And it is called BOLI, B-O-L-I, bank-owned life insurance. And most banks own bank-owned life insurance. You can go on to FDIC.gov and you can see how much they own. There is a video on YouTube that will show you how to do that. And I just went on early this year, early 2019, I went on to FDIC.gov and looked at what they own. And it is really quite remarkable. It is really quite remarkable what the banks own in bank-owned life insurance. And if you guys are at all interested in this, Barry James Dyke has wrote a couple of really good books. One is called The Pirates of Manhattan. The second one is Pirates of Manhattan 2. He's also wrote Guaranteed Income. And Barry talks a lot about the bank-owned life insurance. He talks a lot about the fact that pensions that were in the market are now being moved over to annuities, which is also a life insurance product. And they're doing that to be safe. And you guys have heard me say before that pensions used to be in annuity type products because that is where they could guarantee a retirement income until the day that you died. So I looked at the FDIC.gov website in early 2019. And Wells Fargo, for example, has $18.6 billion of cash value. JP Morgan has 11.3 billion, Citibank 5.1 billion. So between just those three banks, we're at $35 billion of cash value. I did not look to see what their death benefit was. Those are on top executives. So those are going to be more of a key man policy, and it's all going to grow income tax free, right? They're going to get the death benefit when one of those executives passes and is going to come back to the bank. And banks love bank-owned life insurance. They absolutely love it because it is their tier one capital. Banks have to have liquid money and they have to have safe money in order to have a good financial rating. Well, this is what they've got. They've put their money into permanent life insurance. Is it all whole life? No, it might not be. They might have some universal life, but the majority of their tier one capital is going to be in a permanent life product. So next time the bank says, hey, why are you putting so much money into life insurance? You can go to FDIC.gov and you can look up what their bank is doing. I had a banker who was a little bit concerned because their clients were doing business with me. This particular bank, I've got several clients there. And so obviously he thinks I'm taking his business like tomorrow, which always makes me giggle a little. But the client came in concerned that the banker said, you're overpaying for life insurance. We can get you some term. So one, banker's probably never read the book, because if he did, he'd understand what we're doing. Two, we need the cash value, right? So I went online, looked at FDIC.gov, and I was like, wow, your bank has a lot of BOLI. So you might want to take this back to him and say, well, if it's good enough for your bank, why isn't it good enough for me? If your bank is using it as Tier 1 capital, why shouldn't I have it? Why should I have term insurance? Because chances are it's not term at the bank, or it wouldn't be Tier 1 capital. It wouldn't even be showing up on their balance sheet. But that's where it shows up. So getting back to Barry James Dyke, he wrote these books, Pirates of Manhattan, and in his first book, he's got the 2016 numbers. And so I just did a little bit of math. And in 2016, JP Morgan had $6.9 million of BOLI. Today, they have 11.3. They have nearly doubled, not quite, nearly doubled the amount of BOLI that they have since 2006. Well, after 2008 and 2009, are they buying more secure assets because they had so many crap loans on the books? So now they have to really look good again. If we go down to Wells Fargo, today they have 18.6. And in 2006, they had 3.4. Whoa. 3.4 to 18.6. That is just absolutely huge. Citibank had 2.2, and today they have 5.1. We have to ask ourselves, why are the banks buying so much BOLI? Why don't we know about it? People, they're doing it. They're buying this stuff, and we're sitting back and asking silly questions about, I don't know if we can trust it. I've never heard about this. Why haven't I heard about this? When we look at what banks are doing, when we can go out and actually see what they're doing, it kind of becomes a silly question. But remember, I was there with you, right there with you, thought it was the most illegal thing ever, because I had never heard about it and I was looking for stuff. So when we look at who's got it and our banks have it, well, what are they doing with it? Are they using it? So if you have questions about just if you're big believers in the market and you have questions about what's going on, why are we losing these pensions? Can we trust these pensions? I would go online and I would get Barry's books. Now, I don't know if he has them in audio or not. And for my brain, I don't tend to, I'm not going to admit I'm the quickest, person to pick things up. However, these books are not an easy read because they're very numbery. They talk a lot about just stock market stuff. And that is just stuff that I've never studied. I have just a tiny bit of interest in it. I really want the big picture. I don't want to get super down in the weeds, but Barry does. And he's an amazing researcher and he has all the facts there. He has all the places that you need to look. And he's right on, you guys. He's right on. He knew 2008 and 2009 were going to happen because of the research that he's done. He could see that we're going to have problems. And anybody who's paying attention to anything knows that we're going to have problems again. Because if you do a little bit of research now, you will see that the banks have more debt today than they had in 2008, 9, and 10. And so are we going to have to bail them out again? I don't know, but let's hope not. Crazy thing is, when we did bail them out, they had all this money sitting in cash value. And would have we needed to bail them out? Probably not. But besides the banks, who else is using this life insurance? And if you have listened to anything on the infinite banking concept, you will have heard this. But for those of you that are new, J.C. Penney used his cash value to get him through the 30s, as did a lot of people. When we had a banking holiday, they went to their life insurance. And as I said on my last podcast with Jeff Pierce, is that this is not new. Life insurance is 150 years old, and IRAs and 401ks are only 45 years old. So this is not new. People had whole life insurance. It's where they, used money from. It was a very common thing to just go to your cash value and borrow money. And so J.C. Penney's did that through the 30s. Walt Disney did that in order to start Disney World, just because people thought he was crazy and nobody wanted to see a talking mouse, But now the talking mouse is a huge deal. And so are the princesses. Frozen 2 stuff. Oh, I just got a bunch of that stuff as gifts for nieces, and that's a big deal. And that's all Disney. Those of you that know what Pampered Chef is, men, you might not know that unless you're a cooker or a baker, but your wives may. Pampered Chef Doris Christopher started it, and she also had to use her cash value to start Pampered Chef because the bank didn't want to give her a loan. Foster Farms, they are a big poultry operation, and in 1939, according to the company website, Max and Verta Foster borrowed $1,000 from their cash value in order to start Foster Farms, which is still a family-owned operation from what they say. So that's a great testimonial to the egg industry that we can start something. We can use the policy. But again, 1939, that's where people had it. And way back when Walmart was using life insurance, and they actually got in trouble because they were buying key man policies on just about everybody. And you can't do that. It has to be a key man. I actually had a meeting with a gal that worked for Walmart, and she was one of their executives, and she said they have a life insurance policy on her. Now, I don't know if it was term or whole life. I don't believe that she knew, but it is proof that Walmart is actually buying life insurance on their executives. They're not dummies. It takes time to replace somebody, and those top executives are very important. So just like any other business, Walmart is doing the same thing. They see the value of having life insurance on their employees. So there's a ton of options there if you are an employer. But there's also proof that, hey, we can use this life insurance stuff. It's not new. It's old. People have used it. People have gone there to start businesses. I started my business borrowing against my cash value, cashed out my IRA, put it into a life insurance policy, borrowed against the policy, and started my business. It's the only money I had. I was a crazy lunatic. Thought this was a great idea, quit my job, started doing this, thought everybody was going to agree with me. Yeah, probably not so much. Today, that's a different story, but back then, even 10 years ago, we did not have the opportunity to go to the internet and research like we do today. There's so many awesome practitioners out there that are sharing this information and doing YouTube and doing podcasts and have websites that you guys really have great information at your fingertips. I did not have that 10 years ago. My biggest selling factor was going to the North Dakota Insurance website and seeing that I could borrow against cash value, and that was a real thing. Seeing that when I took my life insurance exam, that in the book, it said that I could borrow against life insurance. It asked me that question on the test, and I was still just in awe, thinking this is really true. I can't believe that this is true. And we also need to look at the fact that the Rockefellers really have their estate set up so that everybody has got some cash value life insurance on them. And when they pass away, that goes back into the estate. And how can the Rockefellers still be around today when so many families from that era no longer have money? And it is because of this single factor and some teaching. I shouldn't say this is not the only thing, but they're also teaching their family how to better utilize this. So some really good insight on who's using it, all the way from the banks down to people that have used cash value. Now, these people aren't going to be so awesome in another 50 years because there's going to be so many of you out there using it. I hope that it now becomes a normal thing and just a daily conversation like 401ks and IRAs. And what's the stock market doing? And how's that retirement plan doing? We really, really need to hit that point of people seeing that there are other options out there besides going to the bank, besides investing and putting your retirement at risk. We don't need to do that. That doesn't have to be an option because there's this 150-year-old option that is working and has worked far longer than the FDIC, far longer than the banks. Okay, my friends, that is all I have for you today. I hope that brought some enlightenment and that you were able to get something out of that. If you have questions, if you have concerns, please email me. Let me know. I would love to answer those on here. If you want more information on exactly how this all works, nitty-gritty numbers, you can always grab the book at farmingwithoutthebank.com, read the book, and then may as well grab Nelson's Becoming Your Own Banker right away when you're over there. I sell it as a bundle. So get them both, get all your questions answered, and then hopefully we can sit down, meet, and talk about where we get started. If you have enjoyed this podcast and have been enjoying the podcast, please leave your review. I would very much appreciate it. Until next time, you have a great day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.